Good morning and welcome to another episode of Crypto Talk. I'm your host, joined as always by my co-host. Today, we've got a packed show lined up for you with the Ethereum community at the forefront of our discussions.
That's right. We've got some major developments to dive into, including a suggestion that's been making waves and sparking criticism within the Ethereum community. But before we get into that, let's take a quick glance at the markets.
Yeah, it's been a relatively quiet 24 hours in terms of price movements, but that doesn't mean there's a lack of excitement. Ethereum is trading up slightly and Bitcoin is holding steady. We'll keep an eye on those throughout the day.
Absolutely. Now let's get into this Ethereum rollback suggestion that's been causing quite a stir. Essentially, some are calling for a rollback to negate the recent Bybit hack, but as you can probably guess, this idea isn't sitting well with many in the Ethereum community.
Not at all. In fact, the reaction has been fierce, with many firmly believing that it simply won't happen. Arthur Hayes, BitMEX co-founder, is one of the notable voices speaking out against the idea. What are your thoughts on this? Do you think there's any merit to this suggestion?
Honestly, I think it's a slippery slope. If you start rolling back transactions to negate hacks, where do you draw the line? It's a Pandora's box that I don't think the Ethereum community is willing to open. Plus, it goes against the principles of blockchain immutability.
That's a great point. And speaking of principles, we've got some positive news coming out of the NFT space. OpenSea has announced that the SEC will be closing its investigation into the Ethereum NFT marketplace.
This is huge. The SEC trying to classify NFTs as securities would have been a major blow to the industry. It's a win for creators and builders in the space. And it shows that regulators are starting to understand the nuances of NFT.
Definitely a step in the right direction. We'll continue to explore this topic throughout the episode, including what it means for the future of NFTs and the broader crypto landscape.
And we'll also be discussing the implications of the Ethereum rollback suggestion in more depth. It's going to be an interesting conversation, so stay tuned.
So we just finished talking about the recent developments in the world of Bitcoin, and it seems like the meme coin space is heating up. I want to bring up a story that caught my attention. The number one Bitcoin meme coin, Dog, has just bridged over to Solana.
That's right. This move was announced on Twitter by Leonidas, a prominent figure in the dog community. And it's generated a lot of excitement among fans of the coin. With this bridge, users will be able to trade dog at incredibly fast speeds of 400 milliseconds with transaction fees of less than a penny.
Those are some impressive stats. It's clear that the team behind Dog is trying to take advantage of Solana's fast and cheap transactions. But what does this mean for the broader crypto ecosystem? Are we going to see more meme coins making the jump to Solana?
That's a good question. I think this move by Dog is definitely going to put pressure on other meme coins to follow suit. Solana has been positioning itself as a hub for DeFi and NFT activity, and having a popular meme coin like Dog on board is only going to add to its appeal.
Building on what we discussed earlier about the importance of community in crypto, it's clear that the Dog community is very enthusiastic about this move. But what about the potential risks? We've seen instances of meme coins being vulnerable to pump and dump schemes in the past.
That's a valid concern. However, it's worth noting that the Dog community seems to be fairly organized and transparent about their plans. Of course, that's no guarantee of success, but it's definitely a positive sign.
Speaking of transparency and education, I want to bring up a recent comment by Ethereum founder Vitalik Buterin. He was discussing the Libra crash and emphasized the importance of education in the crypto space.
Yeah, I saw that tweet. Vitalik was saying that the Libra crash proves that education is crucial in preventing these kinds of disasters. He's been a big advocate for crypto education and adoption, especially in countries like Argentina.
That's right. Argentina has a thriving Ethereum community, and Vitalik has been vocal about his support for the builders and developers there. It's clear that he believes in the potential of crypto to drive positive change, but also recognizes the need for education and responsible development.
Absolutely. And I think this is a key takeaway from the Libra crash. It's not just about the technology itself, but about how we use it and how we educate people about its potential risks and benefits. As the crypto space continues to evolve, it's going to be more important than ever to prioritize education and transparency.
We were just discussing the ongoing regulatory challenges faced by cryptocurrency exchanges in the US. It seems like there's been a major development in one of the most high-profile cases.
You're referring to the lawsuit between Coinbase and the SEC. Yesterday, Coinbase CEO Brian Armstrong announced that they've reached an agreement with the SEC to dismiss the litigation.
That's right. After years of back and forth, it looks like the two parties have finally found a resolution. Armstrong mentioned that the agreement still needs to be approved by the commission, but he expects that to happen as early as next week.
This is a huge win for Coinbase and the broader crypto industry. The lawsuit has been a major overhang for the company, and its resolution could pave the way for more clarity on regulatory issues in the U.S.
Building on what we discussed earlier about regulatory uncertainty, this development could be a major step forward for the industry. It's also worth noting that Armstrong highlighted the significant resources that were spent on this lawsuit and the harm it's caused to the country.
Speaking of significant resources, there's another story that caught my attention. A hacker who targeted Bybit has emerged as the world's 14th largest ETH holder.
That's a staggering development. According to reports, the hacked ETH is now seen as a permanently lost supply, which has actually driven up the price of Ether by 2%.
That's right. One observer noted that Bybit may need to purchase ETH to replace the lost supply, which could further drive up demand and prices.
This is an interesting dynamic where a supply squeeze is caused by a hack rather than a deliberate action by investors or the Ethereum network itself. It highlights the complexities of the crypto market and the unexpected ways in which prices can be influenced.
It's also a reminder of the ongoing security risks in the crypto space. As we've discussed before, exchanges and wallets are often targeted by hackers, and it's crucial for users to take steps to protect their assets.
Absolutely. We'll continue to monitor this story and see how it develops. In the meantime, it's clear that the crypto market is as dynamic and unpredictable as ever.
And that's what makes it so fascinating to follow. We'll be back with more news and analysis after this break.
I think one of the biggest takeaways from today's news is the potential for the SEC to drop its lawsuit against Coinbase. We've been discussing this story throughout the episode, but I want to dive deeper into what this could mean for the crypto market as a whole.
Absolutely, this is huge. If the SEC does indeed drop the case, it could be a major win for Coinbase and the broader crypto industry. We've seen how regulatory uncertainty has been a major hurdle for crypto adoption in the US, and this could be a significant step forward.
That's right. And as we mentioned earlier, this could also have a positive impact on Robinhood's stock price. With the potential for more tokens to be listed on exchanges, trading revenue could increase, which could be a big boost for the company.
And it's not just limited to Robinhood. This could also pave the way for more crypto firms to go public in the US. We've seen a lot of companies hesitant to list in the US due to regulatory uncertainty. But if the SEC drops the Coinbase case, it could open the floodgates for more IPO.
Exactly. And I think this also speaks to the broader theme of regulatory clarity that we've been discussing throughout the episode. It's clear that the SEC is taking a more nuanced approach to crypto regulation, and this could be a major step forward for the industry.
That's right. And it's also worth noting that this could be a major win for Coinbase specifically. The company has been under a lot of pressure from the SEC, and if the case is dropped, it could be a huge weight off their shoulders.
So what are the key takeaways from today's news? For one, the potential for the SEC to drop the Coinbase case could be a major win for the crypto industry. It could also pave the way for more crypto firms to go public in the US and increase trading revenue for companies like Robinhood.
And looking ahead to the market, I think we can expect to see some positive movement in the short term. The news could boost investor confidence and lead to more buying activity. However, it's also important to keep in mind that regulatory uncertainty is still a major risk factor for the industry, and we'll need to continue to monitor developments closely.
Absolutely. And that's all for today's episode. Thanks for tuning in, and we'll be back with more crypto news and analysis tomorrow.
And before we go, don't forget to follow us on social media for the latest crypto news and updates. We'll also be hosting a live webinar next week on the topic of crypto regulation, so be sure to tune in for that.
Thanks again, and we'll catch you all on the next episode.